If he's right with this 3,000, I don't know how he came up with that. He's basically saying that either multiples are going to massively contract or we're going to have a huge rollover in corporate profits. And I don't think either one of those two things are going to happen. And the key here is that the economic cycle is in a very good position. Corporate profits are booming. And even next year, when they're not going to be as good as they are in 18, they're still going to be quite positive.
Tony, where are you on next year's outlook?
We're at 33.60, and I'm probably too low. Again, you're going to have probably 25% earnings growth this year. So when you look at the multiple of the market, Sarah, is currently at 19 times. It was 19 times in December 2016, well before the tax cuts. It's 19 times now. So with another quarter coming up that starts in about 2 weeks of end up being about 25% growth there, you're going to get, as Jonathan said, you're going to have you're guessing at a massive multiple compression that has not happened to date. But that said, we're kind of in this period where, as you pointed out on the lead-in, even more important than the tariffs, I think, is the fact that the Fed is meeting, and there's a little uncertainty around the Fed meeting. You're overbought. You have almost 60% bulls, like Jonathan and I. So it's tough to make the case that we're going to go up on the next tick. So we expect some volatility, and we'd rather buy it on a little bit of a pullback for our move to 3,200 this year.
Jonathan, is tech going to keep driving this? And if so, what particular trend? Is it around data? Is it around cloud? What do you think?
Well, I think tech is going to keep driving this. And I think what people are missing is this is not about investors who are investing in these companies on a speculative basis. It's really about their addressable market. And you talk about the areas. So you have, first of all, online, retailing. And if you look at Amazon, which right now is 1/3 the sales of Walmart, what is that, ratio or relationship going to be? Not tomorrow, but in 5 years from now. If you look at online advertising, how much more of the advertising dollars spent to convince us to buy things is going to be done online versus a billboard or radio? Again, over a 3 or 5 year period, a bigger number. And also cloud computing. And this is not only the enterprise level, but how many of those pictures and music stuff that we have on our phone are going to be moved onto some kind of a server, and we're going to be paying a monthly fee on that. And again, I think that's going to be huge. So the story is not only that margins are high, but really that you're going to see a big expansion of the top line, and I think it's underestimated.